Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts, and I'm joined this week by Paul Strome, Nicole Dines, and Dan Innes. Let's start with you, Dan. What have you been following this week?
It's been another week of results in the world of real assets, and British Land, they posted their third straight year of annual losses. They had pre-tax losses posted of 1.05 billion for the year to March 31st, and that takes more than 2 billion off the value of its retail sites and office space. But it was able to collect 71% of rent across its retail estate this year, despite the pandemic, which, to be fair, is higher than many of its peers. And looking to the future, BL is setting its sights on life sciences as it plots its recovery from the pandemic. You know, many developers right across the country are exploring opportunities to develop their own laboratory and life science space. Even people like cost consultants, Alinea, they've earmarked life sciences as a real focus. I mean, they've already got half a dozen life science projects on the go in London alone. So I think we're going to see more and more on the life science sector, and I know that we've been following that as a group here. Elsewhere in debt finance, Fortwell Capital has extended its relationship with Cain International, and they've taken its credit line from 400 to 500 million pounds. They're going to use this increased fund to grow its lending activity, which includes an undertaking potentially for its first loan outside of the UK. The pandemic has sort of shed light on the need for investment into later living, and this is a sector which they're now particularly focused. It's continuing to attract developers and investors alike, and some 1.8 billion pounds has been committed into the senior living space in the first quarter of 2021, and a further 1.2 billion pounds has been committed in deals struck over the last 8 weeks. Chief Exec Dan Smith said the new funding is going to enable Fortwell to look at those opportunities in new markets, not just in the UK but outside as well, and possibly even find a new capital partner to add to Cain to fuel that growth for the business. This week as well, regeneration specialist Peel Land and Ports, they announced they're exploring to set up a new platform to develop later living. And they believe that many of their waterside projects, their strategic spaces and land that they've been acquiring over the years, that they're ideal for retirement living within a range of residential types and tenures. They already work with developers in the sector, but it's looking at delivering schemes itself now by putting together a new business platform, much like it did for logistics. And Peel's plans follow a surge of investment into later living in 2021, which peaked this week with a £500 million joint venture from BlackRock and Audley, and a £300 million investment from Four Partnership. That's definitely one to watch. And finally, in major planning news for London, Greenwich Council has approved a £400 million regeneration project for Woolwich Town Centre, and that's for St Modwyn and Notting Hill Genesis. And they've had plans approved for that will see the delivery of over 800 homes. 158 of those are going to be offered as affordable tenures, and 56 are going to be those at family size. The development could be one of the most sustainable in London, with heating and cooling systems that's going to see savings in carbon dioxide emissions of more than 50%. So sustainability right at the front of the agenda, and major planning approvals beginning to show their faces around the UK.
Yeah, affordable housing and senior living have been a really big focus recently. And in terms of London projects, I also noticed Union Investment invested over 500 million euros in what will be the new British Telecom HQ, completed last year by Aldgate Developments. And that's BREEAM Excellent and Wired Score Platinum, and the attractiveness of both the TMT sector as well as the mixed use element and plans investment in infrastructure were highlighted by Martin Shaline. And on the life sciences side, I had an interview with Margaret Davidson, leader of the Highland Council, on how both the life sciences and green energy sectors were seeing significant growth and an increased focus from a real estate perspective. And Nicole, you were also following that sort of crossover with real estate and infrastructure.
Yes, well, as the media held the first of what is going to be a series of summits on infrastructure, and everyone agreed that it's very much fast forward for infrastructure. A PwC study shows that it's the fastest growing asset class globally, with real estate coming second. And in a conservative estimate, they say the asset under management will double to $2 trillion by 2025, and that's a worst case scenario, and the best case scenario is 2.2 trillion. So huge progress on that front, and obviously ESG is very much part of it. It's very much a global phenomenon. I mean, we all know that Joe Biden has put forward some $2 trillion in infrastructure projects. If that project goes through, clearly that's going to lead to huge development. There are things going on in China with green bonds, in Malaysia, in Australia. So it's across the world. But Europe, everyone agreed, is very much the best place for opportunities in the infrastructure sector, partly because the European Union has been a pioneer in pushing the green agenda. And most portfolios are overweight Europe. So the best opportunities, the best valuations are to be found in Europe. Real Asset Media also held a briefing on affordable housing. There were two main elements that came out. One is that partnerships are very much the key to making progress in affordable housing, partnerships between the local councils, the sort of public sector and the private sector. And the second is very much having clear rules. It's an issue everywhere. I mean, Edinburgh, for example, is building the council is building 20,000 homes, but they're saying they need thousands more. In the UK, there's 1.2 million people on waiting lists for affordable housing. In England, they're building 50,000 houses, but they estimate that at least 3 times that much of housing is needed. And again, it's clear processes, clear rules. For example, in New York, Greystar was saying that it's very clear, the rules are clear, the processes are clear, and that's not the case in Europe, and it's certainly not the case in London. So that creates obstacles and leads to less affordable homes being built because of the lack of clarity for investors. And another issue that came out of the briefing is generation rent, as we call it, is very much here to stay. And renting gives people flexibility. And it also says it's very good for cities because it leads, when people buy, the financial investment and the emotional investment is such that people tend to stay put. While with renting, clearly there's lots of coming and going, and especially of young people, young professionals. And that leads to sort of, lively city centers and sort of more, constant renewal of cities, which is a positive. Obviously, the other issue that has to be addressed is affordability, because people often, prices go up constantly, and the solution to that affordability problem is obviously supply.
Yes, that link between affordability and successful cities came through very strongly. And picking up on the sustainability side, I thought it was significant that Shell, in what was something of a landmark case, lost in the Dutch courts and were ordered to reduce carbon emissions by 45% by 2030. This is the first time a company's been legally obliged to align its policies with the Paris Climate Accords. And that's got to sharpen the focus even more on CO2 reduction, especially in the real estate world. Paul, what have you been following?
Well, there's been a fair bit of manoeuvring reported in the residential sector this week. CBRE Global Investors announced that it had raised a further £120 million equity for its UK Affordable Housing Fund, having deployed most of the £250 million of initial capital raised in 2019 ahead of schedule. The additional capital will provide capacity to build 2,000 homes. So far, AHF has made 12 investments across the UK, and it's in advanced due diligence on a further 5 investments. The AHF was one of the first UK unlisted funds to take institutional capital into affordable housing across the UK, and it's attracted investment from a lot of the UK's local government pension schemes. Also this week, we've seen Sweden's Heimstaden Bostad buy into UK's second city, Birmingham's housing market. It paid about 160 million for a 752-unit residential development project, Soho Wharf, in a forward funding deal with Apsley House Capital and Galliard Homes. And that's to get into the growing rental housing market in the UK. And it pointed to the fact that the city is one of Europe's youngest populations, with 46% under the age of 29. Then in Germany, housing giants Deutsche Wohnen and Vonovia have agreed to merge in a deal that will create Europe's largest residential real estate group, with a combined market capitalization of around 45 billion, but with a total real estate portfolio worth about 90 billion. Vonovia is making a cash offer of €52 per Deutsche Wohnen share in a deal that represents a premium of 17.9% on Deutsche Wohnen's share price a week ago. Rolf Buch will remain Vonovia's CEO. Deutsche Wohnen's CEO Michael Zahn is to be appointed as deputy chairman of the management board. It's not the first time that Vonovia has attempted a merger with Deutsche Wohnen. In 2015, the company attempted a 14 billion hostile takeover bid, but didn't win the support of Deutsche Wohnen shareholders. However, it did remain among the company's largest shareholders until 2019, when it sold the that had then increased to around 730 million euros.
Yes, a lot of focus on residential at the moment. Patrizia are also in the headlines recently for their investment of a 90% stake in that 750 million residential development in Berlin's Spandau district from funds managed by investment firm Castle Lake. And in terms of the people moves, it was announced that Amal Del Monaco is joining Patrizia from AXA Investment Management as European Head of Asset Management and Chair of Country Heads, taking over from Rikke Lykke. Even with my limited grip on Danish, it tells me that Rikke is moving on to another top job in the industry, so we look forward to following that over the coming weeks. Thanks very much, Dan. Thank you, Paul. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.